although it is written in the books that economic growth is one of the objective of monetary policy, yes, if we say that economic growth is objective of monetary policy, then we must be careful. That is, the objective of monetary policy is stabilization, or to be precise, price stability. And if there is price stability, then of course it will provide an enabling environment for high economic growth. So in that sense, high economic growth depends on price stability. So if central bank achieves the objective of price stability, then definitely there will be high economic growth. In that sense, high economic growth can be an objective of monetary policy. Then financial market stability, interest rate stability, and foreign exchange market stability. So these are different goals which are written in the books, but not necessarily that every country is targeting monetary policy to achieve these goals. So any one of these can be achieved at a time. And for that, I must say that the prime objective is price stability. Now, this is the monetary policy transmission mechanism, that whenever central bank changes the tool of monetary policy, then how does it affect inflation and output, which are the ultimate objective of monetary policy. So initially, there is some monetary policy action, and that action is mostly related to short-term interest rate, as is done by State Bank of Pakistan. So in the first step, there is monetary policy action. That action can be current or expected. So central bank can signal to the markets through its anticipated or expected actions. So the monetary policy action can be current or it can be expected. Whatever it is, it affects short-term interest rate. So basically, the decision is taken on short-term interest rate. And secondly, if there is some expectation that central bank will change its course of action down the road, then it affects expectations of the market. Now, these expectations affect wage and price setting. Similarly, short-term interest rate itself and its expectation affect market interest rate structure. Then monetary and credit aggregates, asset prices, and exchange rate. Of course, exchange rate is essentially an asset price, but this is the price of foreign exchange, which is also an asset. So short-term interest rate, whether it is currently changed or it is expected to be changed, these two things, current interest rate or expected interest rate, affects market interest rate, and especially market interest rate structure, that is short and long-term interest rate, then credit and monetary aggregates, asset prices, and exchange rates. Now, these four components affect aggregate demand in the market. So basically, what central bank does, it ultimately affects inflation and output through effects on aggregate demand. So through these four channels, aggregate demand is affected and wage and prices are affected, which affect domestic goods prices as well as imported. Effective imported goods prices are basically independent of, basically they are exogenous. But of course, their rupee value, if we talk about Pakistan, their rupee value is very much dependent on exchange rate. So basically, these four components affect aggregate demand. Aggregate demand affect domestic goods prices, and ultimately that affects inflation and output in the country. So we start from the monetary policy instrument, which is short-term interest rate, and we end up on inflation and output, which is the ultimate goal, especially inflation. Now, coming to the monetary policy framework of Pakistan. First of all, what is monetary policy objective in Pakistan? For that, we must consult State Bank of Pakistan Act 1956, and it is amended in 2021-22. So according to that amended act, the objective of monetary policy is basically domestic price stability. So the only objective, or the first objective, the prime objective according to Central Bank Act, is price stability. Price stability is the prime objective of monetary policy in Pakistan, according to the amended Act, SBP Act 1956. And then after price stability, we can look at other objectives as well. That is, without prejudice to set primary objective, which is price stability, contribute to the stability of the financial system of Pakistan. So the second objective is financial stability or financial system stability. And then supporting the general economic policies of the federal government to foster development and fuller utilization of the country's productive resources. So if we rank monetary policy objectives in Pakistan, then the prime objective is price stability, then financial system stability, and then utilization of country's productive resources, which is of course about output or stabilization of output, or you can say that full employment and economic growth. So the first objective is price stability, second is financial stability, and third is employment and output, high employment and output growth. As far as intermediate target of State Bank of Pakistan is concerned, there is no explicit intermediate target. So as I initially introduced the monetary policy framework, in that there is an intermediate, after goals, there is an intermediate target. But in case of Pakistan, there is no explicit intermediate target. And these are the slides which I have, most of the statements on these slides I have taken from the website of State Bank of Pakistan. So this is not my own statement, rather it is the statement of SBP, that there is no explicit intermediate target. And what central bank does, it controls inflation by influencing aggregate demand relative to productive capacity. So central banks try to achieve the target set for aggregate demand. So central bank directly targets aggregate demand through its instruments, and there is no intermediate target as such. Inflation and inflation forecast implicitly serve as nominal anchor. So intermediate target, there is no explicit intermediate target. However, there is an implicit intermediate target, and that intermediate target, which is implicit, is inflation itself or inflation forecast. By the way, Pakistan is not fully into the inflation targeting regime, but in inflation targeting regime, nominal anchor or intermediate target is inflation forecast. So according to the website of State Bank of Pakistan, inflation or inflation forecast implicitly serve as nominal anchor. So we can say that there is no explicit nominal anchor or explicit intermediate target, but there is an implicit target which can be inflation forecast or inflation itself. Now, instrument of monetary policy in Pakistan. There are two types of instruments, monetary aggregate or short-term interest rate. In case of Pakistan, the monetary policy instrument is short-term interest rate. And to be precise, which short-term interest rate has been is being used by Central Bank of Pakistan as instrument of monetary policy, that is overnight money market repo rate. Central Bank sets an operating target for this overnight money market repo rate. That is Central Bank's policy rate, SBP policy rate. So the instrument of monetary policy in Pakistan is overnight money market repo rate, which is a short-term interest rate. And then an operating target is set for this overnight money market repo rate, which is called SBP policy rate. So SBP policy rate is not directly an interest rate, which is paid on some instrument. Rather, it is an operating target for another interest rate, which is overnight money market repo rate. That is called SBP policy rate. Then mostly these tools are used in Pakistan to achieve monetary policy objectives. One is SBP reverse repo rate, which is ceiling rate of the money market. SBP reverse repo rate. Then SBP repo rate, which is floor rate. So central bank is using interest rate corridor system. And the ceiling of the corridor is SBP reverse repo rate, which is normally known as discount rate. So SBP policy rate is an operating target for overnight repo rate, and for money market or for overnight repo rate, the ceiling rate is SBP reverse repo rate, which is also discount rate. And its floor is SBP repo rate. And SBP repo rate is basically the rate which central bank pays to commercial banks on their excess reserve holdings. So this is a floor rate for the market interest rate. Then there is open market operation, open market sale or open market purchase, which are used as monetary policy tools. And finally, reserve requirement, which are CRR or SLR, currency reserve ratio or statutory liquidity requirement. But in case of Pakistan, the most frequently used tool is open market operation. In every monetary policy committee's meeting, policy rate is decided, which is the target for overnight money market rate. And then with the announcement of policy rate, there are two other announcements as well, ceiling rate and floor rate. So basically the ceiling and floor of the corridor is set by monetary policy committee, and then to keep overnight money market rate on the policy target, which is policy rate, central bank mostly uses open market operation. So open market operation is the most frequently used monetary policy tool. There are this tool is also their reserve requirement, which comprises CRR and SLR, but these tools are rarely used. That is, if there is a change in CRR or SLR, I think we can, if we look at the historical data, these changes take place after years, whereas open market operations are frequently used, and 8 times in a year, monetary policy committee, there is a meeting for monetary policy committee which decides on SBP reverse repo rate and SBP repo rate. So you can look at the corridor from the historical data. This is from January 23 to November 23. You can see the red line or red dotted line representing SBP repo rate, which is the floor. So you can see that the green line is using weekly weighted average overnight repo rate. So you can see that it doesn't happen that this green line is below that red dotted line. Why? Because red dotted line is the floor. Then there is SBP reverse repo rate, which is ceiling. And then SBP target rate, which is basically called policy rate, which is currently at 22%. This is represented by blue line. And then the green line is the actual money market rate, which is fluctuating around the blue line, which is policy target. So basically, this is the interest rate corridor system, which is being used by State Bank of Pakistan. A ceiling rate, floor rate, and then in the center of these two rates, these two limits, there is a policy target, which is called policy rate, and then the actual money market rate fluctuates around that policy rate. Now, currently, the monetary policy, state bank policy rate is 22%. Now, whenever there is change in central bank policy rate, then it affects other interest rates in the market. So I have collected data. I am showing you the data, current data about of different interest rates. So you can look at the figures that if the current policy rate is 22%, then most of the interest rates in the market, especially the short-term interest rate, or any short-term interest rate other than overnight repo rate, all those are close to this 22%, which is the policy. So on 21st December 2023, just the day before yesterday, I think, the repo rate, this is the weighted average overnight repo rate for which central bank sets operating target, that is policy rate, 22%. So currently, the policy rate is 22%, which was kept stable at 22 in the meeting, MPC, our Monetary Policy Committee's meeting held on 12th of December this year and this month. So the weighted average overnight repo rate was 22.4% on the day before yesterday, slightly above the policy rate. So this money market rate, which is the overnight weighted average overnight repo rate, this cannot exceed 23%, which is currently the ceiling rate. It cannot go below 21%, which is current floor rate. So it fluctuates between 21% and 23%, given the current interest rate corridor. So on the day before yesterday, it was 22.4%. Now look at the COIBOR rate. All these COIBOR rates are within the limit of 21 to 22%. Although there is no such guarantee that 1 year COIBOR rate is within the limit, this can be outside the limit because the limit is set for the short-term interest rate. So if you look at the 1 week, 2 week, and 1 month COIBOR rates, the offer rates 22.21, 22.17, and 22.10, all these are well close to the policy rate of 22%. Why 9 month and 1 year COIBOR rates are below 22%? Because there is an expectation that central bank will change its policy rate in future. So it is very much expected that State Bank of Pakistan will lower its policy rate in near future. That's why 9 month and 1 year and even 6 month COIBOR, 3 months COIBOR is below 22%. This shows the market expectation about central bank's policy rate. As I have already said, that there are limits on the market interest rate, which are ceiling interest rate and floor interest rate. And for that, there is an option of standing facility, which is called standing facility. That is, central bank is the lender of last resort, as well as the borrower of last resort. So historically, central bank has remained lender of last resort, but more recently, it has become borrower of last resort as well. So that function is shown in this slide. That is, there are some ceiling transactions as well as floor transactions. So you can look at the data. These floor transactions show that central bank is performing its role of borrower of last resort. Whereas ceiling transaction shows that central bank is performing its function of lender of last resort. So you can see that central bank has lent to 5 banking institutions an amount of 950 billion rupees on 14th of December 2023. Similarly, 162 billion rupees have been lent to 3 commercial banks on 21st December, that is the day before yesterday. Whereas basically I have included these slides for students especially, that how to read this data. For example, if you look at the floor rate, then on 22nd December 2023, and it means yesterday. So yesterday, 4 commercial banks parked almost 379 billion rupees with the State Bank of Pakistan. That is, and they will charge to the State Bank of Pakistan, or you can say that central bank, State Bank of Pakistan, will pay to these 4 commercial banks an interest rate of 21%, which is the floor rate on this 379 billion rupees. Now look at the latest T-bill auction, which was held in December 2023. So here you can see that 3 months treasury bill rate weighted average yield is 21.36%. Similarly, 6-month treasury bill rate is 21.355%. And then 12-month is 21.411%. So if you look at this, then the T-bill with longer maturity has lower interest rate. Normally, longer maturity T-bills have higher interest rates. That's why the yield curve slopes upward. That is, short-term interest rate is low, whereas interest rates are higher. But if you look at the current data, which is data of December 2023, then now 12 months treasury bill rate has lower rate than 3 months treasury bill. So this is called inverted yield curve. That is, it slopes downward. Why? Because again, there is an expectation in the market that central bank will lower its policy rate in near future. Similarly, if you look at the these are basically OMO result. The latest OMO, which was on December 22, 23, that is yesterday. So yesterday, Central Bank of Pakistan has conducted an OMO, open market operation. And it was open market purchase, reverse repo purchase. This is called injection. That is, Central Bank has injected money into the market. So what was the result of this OMO, which was conducted yesterday? There was 3 different types of OMO tenor: 7-day, 14-day, and 28-day. And if you look at the rate of return accepted, that is percent per annum, that is 22.06%, 22.07%, and 22.04%. So OMO rate, which is open market rate, that is very much close to the central bank's policy rate, 22%. So different interest rates basically move together. There is an alignment between, but because different instruments markets are integrated. Whenever central bank changes its interest rate, then all interest rates of the market change. But this is an OMO interest, that is central bank has injected money against a collateral of T-bill. So central bank has injected money, that is given money to banks, and charge interest rates of 22.06 or 22.07 or 22.04%. Whereas commercial banks are charging, look at the T-bill auction rate. Commercial banks have charged from the government 21.4%, whereas central bank has charged to commercial banks 22.06%. So the OMO injection rate is above T-bill auction rate. So in a sense, commercial banks are making losses. If we look at the Pakistan investment bond is floated with different maturities from 3 years to 30 years. If you look at the weighted average yield of 3 years Pakistan investment bond, that is 17% approximately. 5-year 15.8%, 10-year 14.9%. So again, this is showing an inverted yield curve. Why? Because there is expectation that in the long run, central bank will not maintain its policy rate up to 22%. Actually, long-term expectations are showing that central bank will adjust its policy rate towards 15% as far as this slide is concerned. Now coming to the last Monetary Policy Committee's decision. Monetary Policy Committee comprises 10 members. One is the Governor State Bank. Then 3 executive directors are executive members from the State Bank of Pakistan. 3 independent researchers, which are from outside State Bank of Pakistan. These are mostly economists. And then 3 members are from the Central Bank Board. That is non-executive director of central banks. So overall, there are 10 members of Monetary Policy Committee. This Monetary Policy Committee's meeting was held on 12th of December 2023, and they have taken some decision regarding the policy rate and of course ceiling rate and floor rate. So first of all, I would like to discuss with you people the economic data on the basis of which Monetary Policy Committee has taken its decision regarding interest rate. So first of all, if we look at the these are basically different economic indicators. So whenever Monetary Policy Committee meets, it discusses the overall situation, economic situation of the country on the basis of which the members decide the policy rate and of course ceiling rate and floor rate. So if we look at the overall LSM index, this is large scale manufacturing index. Then its growth is currently in 2023 throughout the year, its growth rate was negative. So basically, last year was an year of economic crisis. If you look at the red bars on right panel of the figure, all are negative, which means overall LSM growth rate was negative throughout the year. For all months, this red bar is negative. Whereas in case of the fiscal year 2024, the first month of the fiscal year, July, witnessed negative LSM growth, whereas for remaining 2 years, for which data is available currently, August and September, LSM growth rate is positive. So what can we say from this data is that our economy is recovering from that crisis point and from that lower output. Now we are in the positive range or the positive territory, that there is some economic recovery taking place. That's why the LSM growth rate is positive for the last 2 months for which data is available. If you look at inflation, then overall CPI inflation was around 38% in May 2023. The year-on-year inflation was around 38%, and that was the peak in May 2023. And then it gradually come down to 26% in October 2023. And then in November 2023, it again picked up to 29%. And this slight increase and this slight reversal of trend, that is initially inflation rate went down from 38% to 26%, and then slightly increased in November to 29%. This slight increase was basically because of the natural gas prices, which were adjusted in November. So that's why the inflation rate was slightly above that. Now, if you look at the core inflation rate, then core inflation rate is slightly coming down. If you look at the trend, this blue line, then if it came down from September to November. So, but it is still high because core inflation, its trend is slightly downward. So there is no tendency that this core inflation rate will be close to its historical average of 5 to 6% in near future. So rather it will come gradually, uh, and it is expected that it will be in the acceptable range of single digit by fiscal year 2025. That is approximately after 1.5 years. Uh, this is the situation of our external account, that is balance of payment account. Here you can see that current and capital account is on October 2023, it is slightly positive, which is negligibly positive. So we can say that still it is in positive range. So last year, our current account was in negative zone, and now for this particular month, October 2023, it is in positive range. So it is expected that there will be current account deficit for fiscal year 2024, but it will be within some acceptable range. If we look at workers' remittances, then workers' remittances, if you look at the first 5 months of this fiscal year and compare these months with the previous year's uh, remittances of previous year, then for the first 3 months, remittances were lower as compared to previous year. But if you look at the last 2 months, that is October and November, then in both months, remittances were above the level which were, if you compare these remittances with fiscal year 2023, October and November, then you look that current remittances are higher than previous year. And this is basically the result of foreign exchange market stability, because our exchange rate is stable and the difference between open market and the interbank market is now close to 1 to 2 rupees. So that's why now people prefer sending their remittances through official channel or through formal banking channel. That's why current remittance level is better as compared to previous last year. If you look at real interest rate, it is still in negative zone. Some people say that current interest rate is high. So we can discuss over the level of interest rate, but if you look at the real interest rate, so basically, as most of the participants are students, so for students, I must say here that the instrument of monetary policy is although nominal interest rate. Central bank cannot directly change real interest rate, but its operating target or its target is actually implicitly linked with the real interest rate. So what actually matters is real interest rate, because central bank affects aggregate demand through its short-term interest rate instrument. So if short-term interest rate is just adjusted according to nominal values, it has no relation with the aggregate demand. So central bank will be unable to achieve its targets if it focuses only on the nominal interest rate. So implicitly, central bank targets real interest rate. And if you look at real interest rate for different rates, SBP policy rate or 6-month KIBOR rate, and you adjust it with from core inflation rate or headline inflation rate for every measure of interest rate and for every measure of inflation rate, the real interest rate is currently negative. Now look at the inflation of other countries. That is, most of these countries are either our neighboring countries or our trade partner countries. So if you look at the data, again, in the this is showing the global scenario. So inflation rate was highest in October 2022, and after that it is slightly decreasing. So if you look at the data overall from November 21 to November 23, so there is an inverted U-shaped curve. That is, it went up inflation initially, and then after October 2022, it has been declining. But still, it is above historical average. So Pakistan is not the only country which is facing high inflation and high interest rate. These other countries also face high inflation rate, and due to that, they increased their policy rate. These are their policy rates. So although their policy rate maximum for India is 7%, 6.5%, but still, if you compare them with their historical averages, they increased in different steps from almost 0% to 6.5% or to 5%. So inflation rate was high in those countries. And now after October 2022, inflation rates are declining. But still central banks are not willing to adjust their policy rates. Policy rates are still high. Even if you look at the data after October 2022, there is no adjustment in policy rates. So it means central banks are waiting for further decline in inflation rates, and after only when inflation rate will be aligned with the historical averages, only then central banks, I think, will be willing to cut their policy rates. So this is the scenario, that current economic situation of Pakistan is there. You have looked at that. And then the global scenario, that global inflation rate and the global policy rates. Now, according within this context, that is economic condition of Pakistan as well as the global scenario, Monetary Policy Committee has decided in its meeting held on 12th December to maintain policy rate at 22%. So although there were hopes that central bank would cut its policy rate below 22%, but it didn't cut. Why? One is the global scenario, that most of the central banks have not cut their policy rate yet. And secondly, the reversal of trend in inflation, that it was declining from 38% to, it declined actually from 38% to 26%, but then there was a slight reversal to 29% in November 2023. So that's why Monetary Policy Committee has decided to wait for the next meeting to change the policy rate. I don't know what will be the decision in the next Monetary Policy Committee meeting, but I hope that central bank will cut its policy rate in the next Monetary Policy Committee meeting. But this is just a forecast. We can't say anything for sure. Thank you.
Thank you very much, Wasim sir, for the very beautiful lecture. Beautiful in the sense that this is my first experience that you have quoted the most recent data, that is yesterday's data. And this is my first experience in my life. I always listening the lectures with a historical data, but not recent data. So I really appreciate your effort. Your lecture shows that in the morning, today in the morning, you are still preparing the lecture.
Yes, I actually prepared this lecture in the morning, but this was basically a motivation to my students at Minhaj University, that this data is available on central bank's website. So whenever there is T-bill auction or OMO, or there is an auction of PIBs, so most recent data is available on central bank, the State Bank of Pakistan's website. So this was basically a motivation for students.
Yeah, but we need in our all universities all over the Pakistan teachers like you who use the recent data. Anyway, should we come to the question answer sessions?
Yeah, please, please.
Ji, anyone have questions regarding the lecture? Should I ask one question,
Yes,
Dr. Sir?
please, Tayyab sir. Ji, please, Tayyab sir.
The primary objective of the State Bank of Pakistan or Central Bank of any country is the price stability. I just want to know that price stability and inflation are a different concepts or the same concept? Because if the objective is price stability, we have inflation of around 30%. Should we continue with this? And this is the objective of the State Bank?
Okay. Okay. So if we move in steps, first of all, we will consult our Central Bank Act, SBP Act 1956, amended in January 2022. According to that, our prime objective is price stability. And for many of the central banks in the world, this is the prime objective, as you have already said, that price stability is the objective. Now, the second question is how to define price stability. And this is not there in the act. So acts are normally silent on the working definition of some concept. That price stability is basically an objective. But what is the working definition of that price stability? Yes, you are right that price stability can be that whether it is inflation stability. If it is inflation stability, then we can stabilize it at 30% inflation. That is also inflation stability. So, first of all, we must differentiate between price level targeting and inflation rate target. So, inflation rate is normally measured from CPI index, or we can measure it from WPI or GDP deflator. So let's talk about CPI. So for example, the current index value, suppose it is 300. So that is basically the price level. Now, one definition of price stability can be that we maintain price level at 300 at its current level, for example, or we can maintain it at its base value 100. So whenever there is an inflation, so suppose we maintain it at 100. And if in a particular year it goes to 105, that is 5% inflation rate, then if price stability is defined as stable price level, then next year central banks has to deflate the economy by 5% so that we will be again on 100 price level. This is one definition of price stability. Now, this definition has not been adopted by any of the central bank in the world. Rather, what actually central banks define price stability, that is a very low stable inflation rate, but positive. Although they maintain inflation rate at a very low level, but it must be positive. For example, throughout the developed world, that just positive rate is 2%. Whereas in case of Pakistan, State Bank of Pakistan defines it as 5 to 7%. 5 to 7% in case of Pakistan is taken as price stability. This is the working definition of price stability in Pakistan. And this is not there in the act. Rather, it is according to central bank. If you look at this December 12th Monetary Policy Committee's decision, this is 1.5 page just. This is called Monetary Policy Statement, which is available on the central bank's website. So even in this monetary policy statement, it is mentioned that in the fiscal year 2025, the inflation rate will be within the range of central bank's target, that is 5 to 7%. So for the case of Pakistan, we can say that price stability means 5 to 7% inflation rate.
Mr. Vikas, please ask your question.
Yes, sir. Can you hear me?
Yeah.
Yes, please.
Yeah, thank you, sir. Sir, my question is from Dr. Shahid. Sir, basically, Dr. Wasim Shahid, sir, basically, in your lecture, you have told us that the Monetary Policy Committee decided to maintain the policy rate at 22% and you hope so that State Bank of Pakistan will cut off in future this policy rate. But sir, you have also linked it to the international central banks, because the central bank in the international markets are not cutting off their policy rate. So we are not doing this. So sir, what is the logic behind it? And being a student, I want to know about it, that what is the relationship between the State Bank of Pakistan and an international central bank? Why we are following international central bank, sir?
So basically, what I have basically, central bank decides, our monetary policy committee decides its interest rate on the basis of two different things. One is, but interrelated, of course. One is the economic condition of Pakistan. That's why I have shown you many slides on Pakistani data. And then the second is global scenario. But your question is, I think, why global scenario is important for State Bank of Pakistan. So I will explain that. Actually, we are not isolated country. Our financial markets are integrated with rest of the world. So if globally, of course, there is a level difference. In case of Pakistan, the policy rate is 22%, but in case of US, it is close to 5%. So of course, there is a level difference, but we cannot, you can say that we cannot deviate from the trend from global scenario. Why? Because this level difference is basically an equilibrium difference. That is in terms of interest parity and in terms of inflation differential. But if, for example, globally interest rate remains high and we cut our interest rate, then the capital will outflow to rest of the world. And we have been facing external account imbalances in the near past. Actually, throughout the history, but the severe crisis was in near past, in the last year. So we don't want our external imbalances to increase. That's why if globally central banks are not cutting interest rate, then our central bank, I hope, will wait for their decision. But again, as I have already mentioned, I have already said that central bank will cut its interest rate. This is for sure. Central bank will cut in future. But in the next monetary policy committee meeting, it will cut or not. This was just a guess that central bank may cut its policy rate in the next monetary policy committee meeting. I can't say anything for sure.
Ms. Shugufta, can you please ask your question? Ms. Shugufta, please unmute your mic and ask your question. Okay, Doctor, one more question from my side.
Please, sir.
That the central bank has a target for the inflation, the fiscal year 25 around 5 to 7%. But if we look at the history, I mean 1 year history or 2 year history, that is quite high. What is your guess? Is it achievable target?
Okay. Let me first compare the central bank acceptable range, which is 5 to 7%, and our historical target. Of course, it is high if we look at only on the last 2 years data. Otherwise, the Pakistan's historical inflation rate, average inflation rate is 8%, which is slightly above the range of 5 to 7%. And I am quite sure that this inflation rate will come down to that 8%. I'm not sure about 7%, but it will come down to 8% on average in the long run. Now, there can be debate on the time duration. That is whether it will come down to 8% in next 1.5 years, If you ask about my own forecast, then I think it will be in the single digit, that is below 10% in 2025. No doubt, there is high inflation rate. Currently, it is about 26%, and for the last year, it was approximately 38%. But I am sure that in the next year, even in this second half of fiscal year 2024, it will come down because there are some signs of this. For example, fuel prices have come down, then exchange rate is stable. Then there is always a base effect that whenever price level is high, then further inflation rate is lower. This is called base effect. So due to different reasons, I am sure that inflation rate will be in single digit, at least in 2025.
Okay, Miss Shigufta, I think there is a problem in the mic of Miss Shigufta. He has sent the written question. Ji, Miss Shigufta, please.
Sir, my first question is from Dr. Wasim. When we talk about inflation, we
And
will
second
consider...
from Dr. Tayyab?
No, sir. No, sir, both from you.
Okay.
Sir, when we talk about inflation, we will consider CPI inflation mostly here or GDP inflation, GDP defaulter.
Okay. Actually, in national income accounts, GDP deflator is used, but for monetary policy, CPI is generally used to measure inflation.
Right, sir.
Now,
second question.
Actually, there
different
is
school
core
of thought point
inflation
out the
as
main
well.
determinants of inflation.
Core inflation is also used by State Bank of Pakistan and many central banks in the world. So let me differentiate between these two. Core inflation is basically a stable component of inflation, which is measured through two different ways. One is that we exclude food and energy from CPI basket, and remaining basket is called non-food, non-energy basket. So inflation rate of the remaining basket, which is non-food and non-energy basket, that is called core inflation rate. Secondly, it is measured through 20% trimmed mean. That is, we exclude 10% items, 10% of the items with weight of 10%. We exclude items with weight of 10% in the CPI basket from the upper side and 10% from the lower side. And the intermediate 80% basket is basically called core basket. And inflation rate of that is called core inflation rate. Now, as far as the objective or target is concerned, the objective or target for central bank is always regarding CPI inflation, which is headline inflation, actual inflation, which includes food and energy inflation. But if we talk about, one is target, the other is indicator, that central bank take inflation rate as its indicator to change policy rate. For that, central banks mostly use core inflation. So core inflation rate is an indicator. That is a guiding indicator for central bank policy decision, headline inflation. Ji, please.
So second question is, when we review the literature, different school of thought point out the different determinants of inflation. But if we discuss about Pakistan, then what can be considered as the biggest reason for inflation?
Actually, Pakistan has average inflation rate of 8% historically. But in 1976, it was close to 36%. In 2008, it was above 20%. In 2022, it was 22-23, it was 38%. So basically, there are different inflationary episodes, and each inflationary episode has different cause. It may have different cause. So, for example, if we talk about recent inflationary episode, that is 22-23, there are many factors, and one was exchange rate instability. The other was high oil prices or high commodity prices in the world. The
Right,
third
sir.
main reason is our fiscal deficit. Then another is liquidity, high liquidity or high currency in circulation. So there are different factors, and in different inflationary episodes, there can be different causes.
So, being an economist, your argument favored economist monetarist or new Keynesian?
Oh,
For basic
I have
reason of
given an
inflation.
unbiased, I have
Okay.
given an unbiased opinion about state of Pakistan's economy. So
Right.
I didn't go into any school of thought. I didn't show my affiliation with any school of thought. So this was just a data.
So
Otherwise,
we can consider
we
any
can discuss
school of
some
thought,
in
implement on Pakistan
some other
situation of a
webinar.
case study.
Sorry,
Sir, according to
sorry.
Pakistan current
Can
situation,
you
can we
please?
choose
Yeah.
any point of view like monetarists say money supply is the basic determinant of inflation, or new Keynesian highlight unemployment is the basic determinant?
Oh,
I think in Pakistan both problems existing.
actually, theory guides policy, no doubt. But when you come to actual practical policy making, there are so many things to consider, not just a school of thought
Right, sir.
policy vision. There can be different, there are so many problems that, and actually policy should be based on information available. At different times, you can take different policy decisions. It all depends at the cause, at the particular cause of inflation at that particular point in time. So we cannot follow the same decision of December 2023 in December 2024. So each time there is different scenario. So policy decision should on the basis of current economic scenario.
Thank you so much, sir.
Sir, one last question from Miss Abir. Yes, Miss Abir.
Sir.
Walaikum assalam.
Sir, I want to ask that as we know the floating and fixed exchange rate, do it affect on monetary policy when they are making about like exchange rate? Did it affect?
You think about the effect of exchange rate on policy decision?
Exchange rate, yes. Is it affect on monetary policy? Because I know that there is a strong relation between, but is it affect on monetary policy?
Yeah, of course. Monetary policy decision is based on many factors, although the prime factor is inflation rate, no doubt. But monetary policy committee does consider other indicators or other economic variables as well. And the most important of other variables is exchange rate. So reason for higher interest rate in the near past, that is the last year, was basically high inflation rate as well as currency depreciation. So exchange rate carries a high weight in monetary policy decisions. And I think after inflation comes exchange rate. It carries the second highest weight in monetary policy decisions. It's not written somewhere, but of course, the decisions show that exchange rate is given high weight in monetary policy decisions.
Thank you, sir.
I'm very thankful to Professor Dr. Wasim Shahisa for his precious time. And Dr. Saab, I am very sorry. We have requested you for 1 hour, but we have taken around 80 minutes of your precious time.
Welcome, sir. Welcome.
Anyway, thank you very much.
Sir.
A very beautiful talk.
Thank you.